Yeah, good afternoon, everyone, and you're welcome to our webinar, the second quarter webinar that we're offering to all our investors, our clients, and we are so glad to have you here on board. Yeah, we can see that you've started joining, and we are so pleased to have you. But it won't be fair if only you enjoy this webinar alone and you have other family, friends, colleagues at work that would love to be here and they are not here, and you have to reiterate everything you learn here to them. So I would advise that you forward that email to them, you can forward the link to them so that they can join and be part of this webinar. And this is a very, very timely webinar where we are discussing about rights issues. I believe that we can all see the screen. So it's not something that only you should enjoy. Let everybody be present. Yeah, thank you for sharing. So this webinar is just about claiming your rights issues and the importance of a CSCS account. Yeah, so we want to take you step by step on how you can claim your rights issues and all you need to know about how your CSCS account will interplay with this. So we have our facilitators here that will take us through, hold our hands and help us through this whole session. And I want you to pay keen attention. So one thing I want you to know about rights issue is that we actually trade these rights issues because most of the companies right now, like you can see, Fidelity has already posted that rights issue. I know various emails have been flying in your inbox from different stockbrokers, and yeah, you have already seen different people telling you to buy a public offer or claim your rights issue. And that is why we are bringing this to you, so that you will not be confused. You will know where to what is what and where each of these things play out. And please, that is why we are bringing this to your doorstep. So we want you to try not to be distracted in this webinar. Focus and get all that you need to get. So there are some safekeeping rules I will mention here before I introduce my facilitators, our facilitators to you. First of all, you can drop your questions on the chat box, either the question and answer session or on the chat box. We have our team ready to take your questions as the webinar goes. Maybe you're not understanding the terminology or something is not very clear, just drop it on the chat box and it will be answered. Another thing is when it is time for questions and answers, you will be given the opportunity to ask your questions. You would be given the opportunity to unmute your mic and speak. Also note that this call is being recorded. So after the webinar, you are going to get the recording and the slides. So you don't need to panic. Maybe you didn't get one thing or the other. As long as you registered for this webinar, you're sure going to get the recording and the slides. So I'll be introducing the facilitators. The first person we'll be having here today is Olumayowa Bolujoko. He's an analyst with AfriInvest Securities Limited, and he will be taking us through what right issue means, what the benefits that we'll be getting from the right issues, how you even claim these right issues yourself. So I want you to note that we have the AfriInvestor 2.0 app, and you'll be seeing Fidelity Bank shares. You can buy different shares. Note that this is not the right issue. Those shares listed at the secondary offers, they are with you and me. We are selling to ourselves, right? This is not from the company, but the right issue and the public offer is directly from this company. So that is why you need to go through the link and register. Mayowa will put us through all of this, so you don't need to worry about this. So thank you all for tuning in. Over to you, Mayowa.
Thank you very much, Blessing. Can you confirm you can hear me?
Yes, Mayowa, we can hear you clearly.
Okay. Welcome everyone to today's webinar. I'm Olumayowa Bolujoko, and I'll be walking you through rights issues. I understand that on this call, we have newbies as well as experienced investors. And in order to put everybody on the same wavelength, I would like to give you a background as to our topic of discussion. So the topic of discussion basically centers around you being a shareholder. So when you have shares in a company, you have two broad benefits you get from those shares you own in the company. The first are non-financial benefits, and the second are financial benefits. However, today we will be speaking more on the financial benefits. First off, one of the benefits, financial benefits you get owning shares in a company is what is called capital gains or price appreciation. Think about it this way. Let's take, for example, you decide to buy some MTN shares at 215 naira. And at some point in time, MTN share price rose to 230 naira. If you take the difference between 230 naira and 215 naira, which was your purchase cost, you have 15 naira. That 15 naira represents a gain, and that is your capital gain, or you say price appreciation on that particular stock. I'm sure you understand what capital gains and price appreciation mean now. Of course, I know some people will be wondering if there are any freebies in investing. Of every time you always have to commit funds to investing for you to reap the benefits. However, I'm happy to tell you that investing also provides you some freebies, and that's called bonuses. So bonuses are basically additional shares you get free of charge. The company does not, you don't need to pay a dime for it. The company gives you free of charge. A good example that comes to mind is NASCON Allied Industries PLC. So if you've been following the news, you realize that this year NASCON Allied Industries PLC declared a 1 for 50 bonus shares, meaning that for every 50 shares you own in NASCON, you get one free share in return. I'm sure some people are excited about this opportunity. Next is dividend income. I'm trying to picture the faces of people that bought into dividend paying stocks, because they will really relate to this. A good example of this is people who bought into Zenith Bank. This year, Zenith Bank paid 3 naira 50 kobo, and that's a reward for them investing in Zenith Bank. So dividend income is just a reward for you investing in a company. When a company is profitable, the company decides to share part of their profits with you, and they give you something for investing in them, and that is called a dividend income. Finally is our topic of discussion to the rights. So right about now, it's time for us to dive into what rights are. Okay, before we discuss what rights are, basically, I would like to just draw your attention to something that you are aware of, and that's something called right of first refusal. I'm going to say, I know some people will be wondering, what's that? Okay, so right of first refusal simply means that it's an exclusive privilege given to you to either take a decision whether you want to accept an opportunity or not. So coming to rights, it simply means that the company is reaching out to you saying that, see, we want to sell more shares, but because you are a shareholder, we are asking you to come and buy more shares. Do you really want to buy more shares? So that's how it relates to right issue. So going to the definition of right issue basically is an invitation to existing shareholders, asking them to come and purchase more shares at a discount in a company. Keywords: existing shareholders and at a discount. Now that we have a basic definition of what rights are, it is now time for us to talk to the attributes of rights. The first attribute of right is that you need to be an existing shareholder. However, there's a caveat to this. Being an existing shareholder has a condition you must fulfill. And that's because you must qualify as at the date the company decides as a cut-off date or qualification date for that particular right. Let me make it a bit practical. Fidelity Bank is currently on offer. And when Fidelity Bank decided that they want to issue rights, the cut-off date for the rights was January 5th, 2024. So if you own Fidelity Bank shares on or before January 5th, 2024, you automatically qualified for Fidelity Bank rights. However, if you purchase Fidelity Bank after that period, after January 5th, 2024, it means that you do not qualify for the right. So being an existing shareholder has a condition, meaning that you must qualify for the right. Next is you need additional commitment of capital for rights. So I did mention earlier that bonuses are free. meaning that you don't pay a dime for bonuses. The company gives you the shares for free. However, for rights, you need new funds, you need fresh funds. So because this season is a season where companies are coming to the market to raise money, if you are interested in taking up rights, which you qualify for, you would want to keep some funds aside for this right so that you can make best use of the opportunity of buying deep into some of these companies that you already own. Next is that rights are issued at a discount. That was also visible in the definition. So rights are usually issued lower than the market price for a specific date. Let me make it a bit more practical. Fidelity Bank decided, said to the market or informed the market that they will be coming to raise rights, and they said that they will be raising rights at 9 naira 25 kobo. Within this period, Fidelity Bank traded within the range of 10 naira, within the range of 10 naira. However, Fidelity Bank is giving you the share for 9 naira 25 kobo, meaning that you are paying lower than what is obtainable in the market. And finally, rights are tradable. That's the final characteristics of right, or attributes, as you may want to call it. That is, you can buy it or sell on the floor of the exchange. Now that we have a basic background as to what rights are, I'm sure some people on the call will be wondering why the companies really raise rights. There are so many options left for the companies to raise rights. Some people might say, okay, they could raise commercial paper if they want to raise money for working capital, or maybe bonds if they want to do expansion. However, there are certain reasons why companies decide to raise rights. And one of the first reasons is that the company might want to expand or make some acquisition. So if a company wants to expand or make acquisition, the company would likely consider rights, because expansions are basically growth plans, and they are long term. And for you to have the right financing match, you would want to raise long-term funds also. Remember that rights are given to existing shareholders, and shareholders are pumping money into the business, and you can be sure that this money will be in system for a long time. So that's one of the reasons why companies usually raise rights. Expansion. A good example that comes to mind is Nymet International Pharmaceuticals PLC. So sometime in 2022, they came to the market to raise some rights. And one of the reasons they stated was that they wanted to build a new plant. So this is a relatable example of the reasons why company might want to raise rights. Next is a company might want to strengthen its balance sheet. So there's something called gearing or leverage. I know that might be a big word, but I'll simplify it. Think about it this way. Let's say that you want to start a business. You have two broad options. Is either you use your money, or you borrow some money. So companies too usually use these options. So when a company is geared or leveraged, it means that they have a lot of borrowed funds in their capital structure. And at times this might weigh in on the company's performance. So some companies might look at it that, okay, let us reduce our exposure to debt, and they might come to the market to raise rights. Another reason is that a company might want to develop innovative products. That's research and development. So they might also want to turn to their existing investors, because at least they are known faces, and it's usually easy for you to get funds from known faces. So known faces in quotes actually, because known faces in quotes actually. So because these investors are known to the companies, and the company is known to these investors, it's usually easy for companies to come and say, okay, we want to develop some innovative products and want to invest heavily in research and development, and we need some money. So this is one of the reasons why a company might say that they want to come to the market to raise rights. So just on the sidelines, some of these three reasons I've mentioned now, there are ways of you looking at it. Even though we are talking about rights, you can also deduce some insights from it. For example, you can decide to cherry pick a company based on some of these reasons. A company that has huge debt in its balance, in its capital structure, it has a lot of borrowed funds, might be thinking of doing some restructuring. So you might want to look at the implication of that restructuring, how will it improve the company's performance? If you see that there's an opportunity there, it's something you can look into and take up. Remember that investing is about spotting the opportunities on time. Another thing is that a company might say that they want to do research and they want to invest heavily in research and development. That's a company might need to look out for, because research and development means that they might want to develop an innovative product, and that product might significantly impact their performance. So those are companies that you might also want to look out for, to see if you could take some opportunities, you could get an opportunity in those companies. Now that I've spoken to that on the sidelines, I'm moving on to the next reason for right. So the next reason for right is that the company might have the interest of the shareholders at heart. Obviously, of course, they ought to have the interest of shareholders at heart. So right usually helps the company to reduce the level of dilution. It is less dilutive. What do I mean by that? It means that it helps existing shareholders maintain their proportionate ownership in a business. Let me make it a bit practical. Let's take, for example, a shareholder has 10% stake in a company, and the company decides to raise rights. So far, that particular shareholder is able to pick up all of the rights, it can be sure that it will maintain its proportionate ownership of 10% in that business. If you compare this with public offerings, it means that the offer is open to the public. So people that are not even existing shareholders can buy heavily into the company and get more stake. So this is one other reason why companies might decide to raise rights. And finally, this has become a very topical issue because sometime in March 28, 2024, the Central Bank of Nigeria issued a circular directing the banks to go for a recapitalization. And one way for the banks to meet up with this new capital requirement is for them to raise rights. So the final reason for rights is that a company might want to meet regulatory requirements. Okay, so we've spoken to some of the reasons why the companies will decide to raise rights, and now it's time for us to spotlight the banking recapitalization. We'll just be speaking to the banking recapitalization. Like I mentioned earlier, there was this directive from the central bank that banks need to recapitalize, and there was a significant increase in the capital requirements. And right now, international banks, what I mean by that is that banks that have international operations are expected to have a capital base of 500 billion. For national banks, 200 billion, regional banks, 50 billion. Merchant banks are to have a minimum capital of 50 billion, non-interest national 20 billion, non-interest regional 10 billion. I'm sure so many people will be wondering, where are they supposed to raise all of this money? 500 billion, 200 billion, these are huge amounts of money. But of course, they will always come to the capital markets, and they will always come to you and I, investors, to raise the money. And given this backdrop, we've seen major banks reacting to the central bank's directive. And the first bank that we'll be speaking to is Fidelity Bank. So Fidelity Bank has decided to come to the market to raise rights worth 29.6 billion at 9.25 kobo. This is at a discount, like we've learned earlier. Rights are issued at a discount. So if you qualify for Fidelity rights issue, which is currently on offer, it is time for you to start planning ahead of the closure. Also, the interesting thing there is that for people who do not qualify for Fidelity rights, it is a great opportunity for you to also buy into Fidelity, because there's also a public offering which is going for 9.75 kobo. We've also seen Access Corp, Nigeria's largest financial institution based on customers, coming to the market to inform the market that they'll be raising rights worth 365 billion naira. So I'm sure that with these two banks and others to come, you can be sure that this is a period where you can't afford to lose opportunities. There are great opportunities that await investors. Now that we've given all of the background, and I'm sure many people have taken notes, it is time for us to speak directly to investors. Of course, at AfroInvest, we always tell you what to do and what to do when such opportunities come up. And I'll be speaking first to the timelines. So what I mean by timelines basically are important dates for you to commit to memory. So the first important date that you need to commit to memory is announcement dates. This is basically the dates that the company says that they want to issue rights. Less is qualification dates. I can't but overemphasize this. This is a cut-off date, the dates that ascertains whether you can participate in the rights or not. The next important date is the commencement date. So that's the date that the right is open. For example, Fidelity Bank opened June 20th, 2024. So that's a classical example of a right open date. The next is the right closing date. This is the date in which the existing investors are supposed to take, or the last date they're supposed to take up the rights. After the last date of taking up the rights, that's the closing date for the rights can become tradable, and that takes us to what is called the right start trading date. So that's the date that the right start trading. This is an important date you need to commit to memory rather, because it gives you an opportunity to know when to start speaking to your stockbroker, so that if you do not qualify for the rights, you can also buy from the floor of the exchange. Remember that I made mention that rights are tradable. And finally, we have the trading close date. So the trading close date is the final date in which the right will stop trading on the floor of the exchange, and that this is the last opportunity for you to participate in the rights. So I'm sure many people right now are taking notes of this important dates, and some people might be adding it to their Google Calendar or Outlook calendar, or maybe Yahoo calendar. That's very, very smart. And I will also say that if you've not done that, it might be a good time for you to start doing it, because these are great opportunities that await you, and you can't afford to miss out of it. So now that we've spoken to the timelines in rights, I'll be talking to what is expected of you to do as an investor. So first and foremost, the first thing for you to do as an investor is to confirm if you qualify for the rights. So there are ways of confirming this. Usually the registrar is supposed to publish names of shareholders that qualify for the rights. However, if you have a do-it-yourself approach to things, you can just check your X alert. If you purchase it very recently, you can check your X alert. What I mean by X alert is the alert you get when you trade when you buy shares or sell shares. You can check the X alert to see if the date tallies with the qualification date. Next is for you to take important decisions. So you need to take one of these 4 important decisions. And the first decision you can take is for you to accept the right, full acceptance. For example, let's say you qualify for 20,000 units. You can decide let's say you qualify for 20,000 units, you can take up the whole 20,000 units, meaning that you've accepted the rights in full. The next is full renouncement. This means that you do not want to take up the right. So it means that you have 20,000 units that you qualify for, but you are not interested in taking up the 20,000 units for reasons that might be personal to you. That is full renouncement. The next is partial acceptance, meaning that you can decide to say, okay, I qualify for 20,000 units, but I can only afford to take 10,000 units. So you take up 10,000 units, then you renounce 10,000 units. This is a case of half full, half empty, whichever side of the divide you fall. And finally, this is for people that they have more financial muscle to take up additional rights. So you can also say that you want to take up additional rights. You have the opportunity to do that. That is after you must have accepted all of the rights that you qualify for. You can say you want to take up more rights. After you've taken one of these 4 important decisions, then you can now move on to say that you can now submit the form and the evidence of payment through either your registrar, your stockbroker, or the issuing house, preferably your stockbroker, AfroInvest. We are here to make the process seamless for you. So as a way of demonstration, because you'll be coming across these two forms, if you decide to participate in this offer, I'll be showing you, doing a practical demonstration as to how to fill the right form. Then subsequently, I'll be talking to the public offering form. So the first is the right form. Right here on the right form, you have a space for you to impute your stockbroker name. Your stockbroker is Afro-Invest Securities Limited. Afro-Invest Securities Limited. Then the stockbroker code is AFWA, 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 AFWA. That's the stockbroker code. Then you have the opportunity to, you are required to also put in your CHN and your CSCS. So you can get this from the Afro Investor 2.0 app. Okay, after filling all of these details, you can now look at section A, if section A applies to you. So section A is for people that want to accept the rights in full and also say that they want to take up additional rights. So there's a field for you to put the number of units and the value. We also have section B talking to people that want to renounce. So if you want to renounce your rights, or you want to accept partially, you can put in the unit you want to accept, the value, and the unit you want to renounce. Then we have a field for you to fill in your basic details, your name, your next of kin, and all of this. Then you will need to append your signature appropriately. And finally, we have a section C speaking to people who want to trade their rights. This is pretty straightforward. You can read through and I'm sure you would understand the instructions that are there. Next, I'll be speaking to the public offering form. So I'm sure you must have gotten emails from Afro Invest notifying me about the Fidelity Bank's public offering. So if you didn't get that email, my colleague will be dropping the public offer link in the chat box so that you can use the link. So that link takes you to a page where you can access the form being displayed on the screen. You have to fill that form, then follow through with the process by filling the form that follows that first page. So now that we've spoken to how to access this form, let me just quickly run through how to fill this form. So the first part of it is a very important instruction. The instruction is that you can only purchase a minimum of 1,000 units of Fidelity Bank shares. So it means that the minimum you can do is 1,000 naira, and it must be a multiple of 1,000. Meaning that you cannot say I want to buy 1,500. You can only say you want to buy 2,000 units, 3,000 units, and all. So a way of doing this is for you to just look at the units you want to buy, divide it by 1,000 to ensure that it gives you a whole number. So the next part is for you to fill declaration. There are places telling you, there are spaces here asking you for the basic declarations, like if you are above 18 years or not, and so on and so forth. After that, you are to impute the number of shares you want to buy, the cost of the shares. Then the next is for you to fill in your basic details, your full name, address, phone number, date of birth, country. Then you are also expected to fill in your CHN, that you can get this from the Afro Investor 2.0 app, and also your CSCS number. Like I made mention earlier, your stockbroker is Afro Invest and the member code is AFWA, AFWA. So we also have a space for joint applicants here. If you are applying as a joint applicant, you have a field for you to fill. It's pretty straightforward. And finally, you have the place to put in your bank name, your bank account number, and all of the basic details you need. Then you append your signature. Thank you very much. I'll be handing over to my colleague, Blessing.
Thank you so much, Mayowa. Yeah, can you all hear me? Thank you so much, Mayowa, for that beautiful presentation. Yeah, we all saw how Mayowa took us through the benefits, why rights issues are being raised by companies, and what we should do. It took us by the hand on how to fill these forms. So I know that we now understand why we have rights issue and what we should do from henceforth. Meanwhile, after this webinar, it would not be too good when we see our investors having issues with rights. For instance, when these rights are listed on the stock exchange and you see them like rights issue of Fidelity, I want you to know that those rights that you are seeing are just access to the major rights. That is, for instance, international breweries just finished their rights and they listed it on the Nigerian exchange and people were able to trade it. So people were able to trade the access to the rights at 1 kobo, 2 kobo, 5 kobo. Now, some people thought that that right is the price of international breweries at that time, like Awoof. I know that Awoof, they spoil belle. So that one is not, it's just an access point to the rights. For everyone that bought that right on the Nigerian exchange, you are going to pay for international breweries multiplied by the unit of the right you bought. And unfortunately, you cannot renounce it. That is, the right you bought via the Nigerian exchange cannot be renounced because you yourself went to the floor of the exchange and bought it yourself. So if you buy 15 million units, know that at the time the right will be delivered to you, you will be debited of the price. If, for instance, Fidelity is trading 9 naira 75 kobo. When they list this right on the Nigerian exchange and you buy 10,000 units, that means you are going to be paying 10,000 units times 9 naira 75 kobo. So we advise clients, if you don't have access to this right and you don't really need the right, there is no need for you to go to the Nigerian exchange to purchase. Anytime you are purchasing the right, maybe because you were not given the right, that means you are willing to take up all the rights that you have purchased and you have the money to buy it. So I know that that should help us. So when you see it at 1 kobo in the market, 3 kobo in the market, please don't buy it. It is just an asset. This is not the right itself. So now we'll be going to the second session and we are having a very familiar face that will be taking us through the session. She has been our host in previous webinar and she has over 5 years experience. She will be taking us through the role of CSCS in this. So it's no other person but Margaret Onuachu. Please listen very well. Take note of the reason why you need your CSCS account. You see that throughout Maiwa's presentation, he kept mentioning you will fill in CSCS here, your CSCS trading account, your CHN account. So please let us know why we ought to do this and why it is needed. Thank you so much. Over to you, Margaret.
Thank you very much, Blessing, for that warm introduction. And thank you once again to my listener. My name is Margaret Onuachu, and I'll be taking you through the role that CSCS plays when it comes to taking up your rights, when it comes to investing or taking part in the public offer, and also for an investor generally, because this account is a very, very important account and it's something that you cannot do without if you're going to be an investor or if you're coming into the market as a new investor. Okay, so what is CSCS, as you would want to ask? You know, my colleague has been mentioning CSCS, filling your CSCS here, filling your CHN there. So what is CSCS? CSCS means Central Security Clearing System. So this is a body, a regulated body that settles all trade that occurs in the capital market. So now, this CSCS also have an account, a depository account, whereby all your shares are domiciled. Now, let's be very practical. We have your bank accounts where you deposit your money or where your money are domiciled. So this is that same account now, like it's almost the same account, like CSCS account where your shares are being domiciled. So meaning if you want to withdraw your shares, that is selling, or you want to add more money to your shares, that is buying more units of shares, you're only going to be able to do that if you have a CSCS account. So now this account is very, very important because for people or for investors who had bought shares in the past and do not know the whereabouts of their shares, right? So we have a lot of people who still stack up share certificates at home, right? So that share certificate that you're keeping at home there it's not valuable at that time because it's still in the paper form. So now to make that certificate important or to make it tradable or to make it valuable, it has to be dematerialized into a CSCS account. So that takes me to dematerialization. What is dematerialization? It simply just means turning that certificate that you have in a paper form into an electronic form. So that has been ongoing for a while. So if you have stack up of certificates at home, it's high time you contact a broker like AfriInvest to help you to dematerialize those shares into your CSCS account. So it also brings me down to the point to see AfriTrack. So this AfriTrack that you're seeing here is a service that is offered by AfriInvest Securities Limited that allows you to recover all your outstanding shares and dividends. Now, speaking about a suspense account, this suspense account is operated by CSCS, whereby if you had purchased shares during IPO in the past and probably didn't have a CSCS account, you just quickly filled the form and you paid for the initial public offer at that time, and you have not claimed those shares. Such shares are being domiciled in the suspense account. The CSCS will just keep it there, pending when you have a CSCS account, then you can now transmit those shares to your CSCS account. Next slide, please. So I'll also be speaking about the benefits of a CSCS account, because it seems like we speak so much on this account. It is because it is very, very important as a new investor or even as an existing investor. There are a lot of things you may not be able to do. You cannot invest in FGN savings bond. You cannot invest in FGN bond if you do not have a CSCS account. And what are the benefits? This account allows you to monitor your shares. So if you had bought 5 units today, you bought 10 units the next day, you bought another 10 units the following week. Now you are able to monitor your shares, right? And also CSCS offers a unique service that you can subscribe to with a fee, that it can give you access to their portal where you can log in and look at your portfolio at a glance. Also here at AfriInvest, you can request for your CSCS statement at intervals. If you want it to be sent to you every day, we can also send it to you every day so that you can look at your portfolio, see what you've done so far, and know what else you should be doing, right? So it also helps you to track your bonuses. So when you hear that a company has declared bonus, these bonuses are not in cash. They are credited into your CSCS account. So if you do not have a CSCS account and you have probably bought one shares and that company declares bonuses, it means you're not going to be receiving those bonuses, right? Because these bonuses are credited only into your CSCS account. Now, CSCS account also allows you to trade your shares. So I spoke on that earlier. You can buy and sell from your CSCS account, and you can also transfer your shares from one account to another. If you want to give to your children or your friends some units of shares, you can cross it to them. They must have a CSCS, and you also must have a CSCS account. You can also use your CSCS, present your CSCS statement. This is a personal benefit now. You can present your CSCS account at the bank for a loan. Depending on the portfolio of your account, you may be granted a loan. And also, you can also present your CSCS statement as a proof of fund at the embassy. I mean, you have an investment and they're asking for a proof of fund, or to show that, okay, you have something for yourself. You can present your CSCS account as a proof of fund. So these are the benefits of owning a CSCS account that you don't even want to miss at any point in time in your life of being an investor in the capital market. So now, how do you own a CSCS account? This is when AfriInvest comes in as your intermediary. So first of all, you need to get this account from a broker. It's not an account that you can download by yourself or download one app or one link get it. You can only get this particular account from your broker, right? So in that case, we are here as AfriInvest Securities Limited as your broker, meaning that you can download our AfriInvestor 2.0 app from either the Google Play Store or from the iOS store and fill in your details. We verify that all the details that you've provided to us is state compliant. We ensure that you provide us your KYC documents. We go through it thoroughly, and we proceed to transmit this same information to CSCS database, where we can now create the CSCS account for you. So like I said, AfriInvest is like an intermediary for you. We get your data, impute it on CSCS, and create a CSCS account for you. And also, it doesn't end there. CSCS now transmits your data to the registrar. That is why the registrars have your data, meaning that when if you buy any particular share, when dividends are being declared, you are able to be verified and dividends are paid to you. So, like I said, how to get this account is through a stockbroker, and AfriInvest is here. If you do not have a CSCS account and you want to take advantage of the benefits of this market, you can download the app from the Google Play Store, and also sign up. You can also visit our physical office if you're in Lagos, and then our addresses will be displayed at the end of the presentation. Also, to add about the special features that we have on AfriInvestor 2.0 app, this is a very unique app that allows you to buy and trade stock at a glance. Wherever you are, just have internet, good internet service, and you'll be able to trade from the comfort of your home, right? So AfriInvest Securities, the AfriInvestor app also allows you to invest in commercial papers, invest in treasury bills, and also you can invest in our special product, which is the AfriTrack. You can subscribe to our special product, which is the AfriTrack product. So this account, I hope I've been able to make you understand why you may not be able to do some certain things if you do not have the AfriInvestor, if you do not have a CSCS account. So this season that we are in is the recapitalization season. Is not a season that you as an investor, be it existing or a new investor that is just coming in, you want to allow opportunities to slip off your feet. So you have to prepare yourself to take advantage of every opportunity that comes your way as an investor. Also, I want to reiterate some points that my colleague had mentioned earlier, that buying Fidelity Bank shares through the AfriInvestor app does not mean that you are buying the right issue, right? You're buying into the public offer, sorry. So if you're buying Fidelity Bank on the stock exchange through AfriInvestor app, or you're giving your stockbroker a mandate to buy Fidelity shares for you, you are not buying the public offer, right? So we've dropped the links for you to click on it, subscribe, make payments, fill the form, and subscribe to the Fidelity initial public offer. Thank you very much. At this point, I'm open to taking questions and comments, and I'll also be handing over to our moderator, Blessing. Thank you.
Thank you so much, Margaret. Yeah, that was a very beautiful presentation. And I know that everybody now understands clearly what rights is and the role CSCS plays to this right. So one thing I will just add before we start taking questions is that you have already filled in your forms and you have said, okay, AfriInvest is your stockbroker, and then you have even paid your money for the subscription into AfriInvest account. Now you have many emails that could be confusing from different stockbrokers. So note that you have to submit that form to AfriInvest, not to other brokers, AfriInvest is your broker, your stockbroker. And like my other colleague said, your member code is AFWA, AFWA. Another thing to note is that the shares will not reflect in your account immediately. That is, you've bought it, you've subscribed for the public offer, right, and you are waiting to sit in your CSCS account, you would not see the shares in your CSCS account until the company disburses the shares generally. So we have to be patient, right? Just be patient. When the whole public offer and rights issue is over, the company themselves, you are buying directly from the company, or the rights issues is issued directly from the company. They themselves, at a specific time, after the whole collation and everything is done, we will now credit your CSCS account with the shares, but later on. So let's be patient. So we'll be taking questions now. If you would like to ask your question, you could actually raise your hand so that we could call you. So I'll be taking, okay, we have Joshua's hands raised. Mr. Joshua Erakotobo. All right, you can unmute now and ask your question. We can hear you. Hello, sir. Okay, it's like we cannot hear you clearly. Okay, can Mr. Saliu take over? Mr. Abdulmajid Saliu. Okay, it's like because of our time. Okay,
Okay,
Mr.
can you hear me
Joshua,
now?
yeah, we can hear you now.
Okay. Okay, very good. Thank you all for your presentation. So my question is just very straightforward. So take for example, I have rights. I have these shares, Fidelity Bank shares in another stockbroking firm, and the rights has been sent to me, but I want to invest this rights through through Afri Invest. What and I don't have accounts with Afri Invest. What what stockbroker name will I put in the right participation form? I don't know if you get my question.
Yes, we get your question. Okay, Mayowa, can you
Okay.
please answer the question? Hello?
Okay, thank you very much, Blessing. So for Mr. Joshua, if I hear you correctly, you said that you have an account on a stockbroker, but you like to participate in the rights through Afri Invest.
Yes, you're very correct.
Okay, so in that case, we can submit on your behalf. You just need to state the details of your stockbroker as well as the member code. We'll submit on your behalf.
Okay, that's well noted. So there's no point me creating another account, another CSCS account, putting Afriverse as the stockbroker.
Yes, there's no point you creating another account. We already have an existing CSCS account as well as CHN, so you can put that on the form.
Okay, thank you very much. I really appreciate it.
You're welcome. Thank you.
Yeah, thank you. Mr. Ifeanyi, you could speak now. Okay.
Yeah, thank you very much. I'm just trying to find out if I have a right issue of 1 million shares, and I've taken up all the 1 million shares. Can I say have an additional one at the same discounted rate that right issue is given that there is a public offer? Will you be giving to me the additional one at the rate, the public offer rate, or at the same right issue rate if I take additional rights?
All right, sir. Mayowa.
Okay, thank you very much, sir, for your question. Like I did mention in the presentation, you can take up additional rights. However, this is subject to an allotment process. So once all of the interests are collated, all the interests are collated, the registrar would look at all of it and see if they would be willing to extend some more rights to you. So that's after the process has been completed and they consider all of the interests they have. I hope that answers your question, sir. Hello, Mr. Ifeanyi.
Yeah, I think his answer is clear with the question. Thank you so much, Maiwa. So, Mrs. Rita, you could talk.
Hello, Blessing. Can you hear me?
Yes, I can hear.
Okay, thank you so much, Maiwa, for that presentation. So, while you were presenting, you mentioned that for speaking to public offer now, you mentioned that it has to be multiples of 1,000. So, I was of the opinion that it was supposed to be, since it's 1 for 10, since it's sorry, not 1 for 10, it's for public offer. That means if the person, let's say for example, the person wants to buy 500,000 naira worth of shares, and that means you're clearly supposed to divide it by 9 naira 75 kobo. That's going to be giving us 51,282, right? So he says that it has to be multiples of 1,000. So how do we calculate that since there's extra 1,282? I don't know if my question is clear.
Okay, so from your question, I understand that you're speaking to you dividing, then arriving at a figure that is not 1,000. So you have to round it off to the closest thousand.
No, it doesn't have decimal. It's just 51,282. So
So
does that work?
282 is not up to 1,000. So you have to round it off to the closest thousand.
Okay, all right.
Thank you.
Thank you so much.
Okay, Mr. Olatokunbo, you can speak.
This afternoon.
Okay. Mrs. Olatokunbo, please, you can speak. You can ask your question.
Can you hear me now,
Yes, we can hear you now. Thank you.
everyone? Thanks to our previous for this educative program once again. I'm sorry I came in a bit late, but my question quickly. I remember I have some shares with Fidelity Bank, but not much. If I want to get more volume, as in higher volume, do I need to go through the public offer route or the right issue route or something? That's one. Then if I want to get in my daughter's name, she's a minor, how do I go about it? Obviously she doesn't have CSCS account or some or the CHN number, but I do. So how do I do that? At least I want to start early in laying a foundation for her in that regard. So those are my two questions. And then I hope we also have a replay of this training. Thank you very much.
Okay. Maiwa, can you please answer the question?
Okay, thank you very much, madam, for your question. So if I heard you correctly, the first question was talking to you having Fidelity Bank shares, and you are trying to weigh, you want to buy some more shares, and you're trying to weigh your options, which is better for you, whether I should go through the public offer or the right issue. So the right issue is at 9 naira 25 kobo, and public offer is at 9 naira 75 kobo. So that's a difference of 50 kobo. If you look at the units you qualify for and you multiply that, you might be saving a lot doing the right. So I would suggest that you take up the right. Then if you even want more, you can also apply for more. Then if if you do not get all of what you need, you can now move to participate in the public offer. So that's my answer to the first question. The other one was saying that you have a daughter that you would like to buy the right for. Is
No,
that
public
correct?
offer, not right.
public offer. Please, can you recap? I could barely hear the second question.
Yes, I said, I'm the one that has Fidelity shares the bid. I want to get higher volume. I was asking, can I do both rights and public offer? If I do rights, would I be able to get as much as I want, or I should just go through the public offer route? Then two, that I want to get shares for my daughter, but she is a minor, you get. So how do I go about that in processing for her? That's it.
Okay, so for the first question, I would advise you participate in right. The difference of 50 kobo there, so you can participate in right, and also you can apply for additional rights if the right you qualify for is not enough. You can apply for additional rights. I believe that is the cheapest alternative for you. However, if you would like to play safe, if you are not sure that you get all of the units, you might also decide to participate in the public offer. Then for the second question, for that question, it is a unique request, and I would advise that you contact us as brokerage@afriinvest.com. The email being displayed on the screen would provide you with more clarity as to your request. Thank you very much.
Yeah, thank you so much, Mayowa. Okay, so Temitayo Oyelade, you can unmute and speak. Okay.
Yeah, good afternoon. Can you hear me?
Yeah, we can hear you clearly. Good afternoon.
Okay, thank you for the presentation. I'd just like to confirm, one, for the Fidelity shares right issue, the right renounceable, and also for existing shareholders that decide not to take up the right, what's the benefit for them if they decide to sell the rights, and what's the benefit in terms of cash return for them?
Okay, Mayowa, did you hear that question clearly? Because this is kind of breaking. So he just wants us to elaborate on whether the shares can be traded, right, Mr. Temitayo? Whether you that are not taking up your shares, if you can
Those
trade
are not
it.
taking up the rights, can they trade? And if they can, what's the calculation for the what cash benefits are they getting here?
All
Let's
right.
say you can use for if you're eligible for a 5,000 rights.
All right, thank you, sir. Okay, let me just answer that question. So actually, you can trade your rights. If you remember in the forms shared, the section C part is for you. Somebody also asked in the chat box, Mr. Omo Sanusi Aliu, something very similar to that can you trade your rights and how does it work? So it's just very simple because these rights are already listed. So if you have this right, number one, if you're not even ready to trade the right, just renounce it. So you have in the form a place where you can renounce your rights. You're saying you're not interested, and then you are renouncing the rights. But if you want to sell the right to other people, you already have that right. So it's already listed on the Nigerian exchange. All you need to do is to send us a mandate to help you sell, because in time past, we've been seeing people buy and sell the rights via the AfriInvestor 2.0 without a vivid knowledge of it. So if it's on the AfriInvestor 2.0, you can actually sell your rights. But in case you're not seeing it there because of control methods, you can send us your mandates that you want to sell your right, and we'll sell it for you via the Nigerian exchange. So, Mr. Temitayo, I hope that answers your question.
Yes. But in terms of, can you hear me?
Yes, we can hear you.
Okay, yeah. In terms of trading my rights, if I am eligible for the 5,000 rights on my current, based on the current allocation. And that means the gain I'm getting is the discount between the right offer and the current market price, right?
So when you are trading 5,000 rights, I mentioned earlier that what you are trading is the access to the rights itself. So for instance, during the time of international bureaus, the people that traded their rights were not able to trade it beyond 25 kobo, right? Because you've not taken up this right itself. So this right has not become a tangible share because you've not taken it up. So you are just selling the access to the rights to another person. So you could just go for maybe 1 kobo, 2 kobo, 3 kobo. So the amount to that access is not the same as the price. I don't know whether you understand.
Oh, okay, yeah. I think I get you.
So when it's listed on the Nigerian exchange, it's sold for like 1 kobo, 2 kobo, 5 kobo, 10 kobo, depending on the demand and supply, like I said initially. So you are not selling at the price of the right because it's just an option for you to take. Do you understand? It's just an option for you to take. It's not the real shares itself that you are trading. So the amount you are getting is not the 9 naira per share that is being traded when it's like an original share. I hope you understand. I'm trying to just break it down to a much more.
Yes. I think initially I was thinking if I think let's say for Fidelity now it's coming in at 925, right?
Yes.
Yes. Then let's assume the main share is at 99 also. So the 25 kobo is the what's it called? Is the discount on it. So is it the 25 kobo times whatever my value of right trading?
So no, when you trade your rights, like what I was trying to explain is that these rights are not yet in your portfolio, right? So they are just an access. When you trade it on the stock exchange, there is already should I say, a predetermined price based on demand and supply to what this right is supposed to be traded. Is not going to be traded trading for 9 naira. It's even created under the OTC, so it's not like a real share itself. You're just giving another buyer an opportunity to take over the rights from you. So it's not the real price of the right itself that is being traded. Neither is it the difference of this.
Oh, okay.
Yes.
Yeah. Okay, clear now. Thank you.
All right, because of our time, we've actually gone way overboard with our time, and we are sincerely sorry. It's not our custom to do so. If you still have other questions, please reach out to us at brokerageteam@afinvest.com. I know that for the people that have been dropping their question via the chat box, they've been getting answers to it. But if you still have questions, just reach out to us through the email you can see displayed on your screen, and we will be ready to take your questions and answer them satisfactorily. Thank you everyone for joining today. Mr. Emeka, don't worry, we will be waiting for your email to answer your question. Time has really gone. Thank you so much everyone for joining. We really appreciate you for coming around today, and we would long to see you in all of our webinars in the subsequent times that we'll be having them. So have a great day ahead. Thank you.